Hello, this is Chamili and I'm gonna introduce my final report for fixed income class. It is Digital Financial Services and Cryptocurrencies Characteristic and Legal Considerations. Let me introduce the table of contents. First of all, after the introduction, I'm gonna tell you about digital financial services. What's the key participants and characteristics? And what is the representative services? There is blockchain, CBDC, and NFT for it. And let me move to the legal issues and major controversies on cryptocurrency. Legal discussions on cryptocurrencies, and I'm gonna conclude my final report. So let me start with the introduction. The emergence of new digital financial services is changing the landscape of the financial industry. With the event of the fourth revolutions around the world, cryptocurrency, which emerged along with developing blockchain technology, is bringing about the paradigm in the financial ecosystem as its scale expands. In this situation, we would like to discuss how our economy should respond to cryptocurrency and other digital services by exploring the major controversies about cryptocurrencies and presenting legal implications. So, let me start with the digital financial services about key participants and characteristics. Major participants in digital financial services include fintech companies, big tech companies, and financial companies. Fintech companies collaborate with financial companies to provide more convenient and simple financial services by incorporating digital technology into assets. However, big tech companies provide financial services by utilizing and analyzing digital technology based on accumulated customer data and then selling customized financial products. The scope of business is being expanded to include payments, loans, and insurance product sales. And finally, the financial companies are responding to the digital financial service ecosystem with strategies to expand partnership with fintech companies and integrate new digital transformation technologies into their financial services. And let me introduce about some representative services about new emerging digital financial services. First of all, let me start with the characteristic. First of all, it is decentralization. With the advent of DeFi, it was evaluated as an innovative response to the problems raised in the existing financial systems by the 2008 US financial crisis. Decentralization has resulted in an increase in the number of financial service providers and a decrease in demand for financial companies. And second is differentiation by function, platformization. In the form of financial institution providing comprehensive services, differentiation by function has occurred with fintech and big tech companies providing only competitive services. Third, increasing financial inclusion. Increased financial accessibility for consumers who were previously in financial blind spots. In addition, financial inclusion has increased as the provisions of loan services based on qualitative as well as quantitative evaluation of credit has expanded. And lastly, high separability based on network effects. As fintech and big tech companies provide customized financial services based on information accumulated while operating platforms, a positive network is created in which service quality and customer utility expand as the number of users increases. And let me introduce about the emerging of blockchain technology and new financial services. First of all, blockchain technology. Blockchain technology is the spotlight as a new generation's technology and is distributed data storage technology. Transactions are recorded in an online ledger and distributed and stored on countless computers around the world. Change data is transparently disclosed to everyone, making modifications and forgery impossible. Therefore, P2P transactions are carried out without intermediaries, so there is no burden of commissions. And there's our stablecoin. It was created to compensate for the severe price volatility of virtual assets. Stablecoins are classified into collateral-based and algorithm-based. In the case of collateral-based coins, the value of the coin is kept constant by making the price linked to fiat currency or real assets. In the case of algorithm-based, price stability is maintained by balancing the supply of hardware distributed around according to demand and remitments through the algorithm. And CDBC is a digital currency guaranteed by the central bank and issued with the same value as cash. According to the Bank for International Settlements, 86% of central banks around the world are conducting CBDC-related research, and more than 50 countries are conducting testing and pilot projects. The advantage of CBDC is that the central bank can immediately implement monetary policy. In addition, by having the Bank of Korea account app, payments and remitments are processed quickly, bypassing commercial banks and private simple payment services. However, there are concerns that fintech businesses will be hit by the closures of individual economic activities to the central bank and the reduced world of commercial banks. NFTs, digital paintings, music, game items, etc. are recorded and authenticated on the blockchain with unique values that cannot be counterfeited or copied, thereby demonstrating their unique originality. When you purchase an NFT, you have ownership, and it does not include copyright. Even if you purchase an NFT, it cannot be commercialized for secondary sales purposes, such as making goods. However, an exception is when the seller has included copyright in the NFT insurance conditions. And let me move to the legal issues. Newly emerging digital financial assets lack a major government-mandated disclosure system to resolve the information asymmetry problem between issuers and investors. The authority of the virtual assets exchange, which inevitably encourages unfair transaction, is concentrated, and the laws of real securities management and security companies are not separated but are concentrated in one place. To solve this, laws that cover all aspects of virtual assets must be quickly established. Disclosures of key investment information on virtual assets must be made mandatory, and independence in listing and asset management roles must be secured. We will look at the legal issues and solutions for each major asset below. So, stablecoin. It is necessary to secure reserves that can be repaid to coin owners at any time. Legal tender paying obligation and owner rights to be repaid at face value must be guaranteed. For example, U.S. regulators have proposed legislation to limit stablecoin issuers to financial institutions that subscribe to deposit insurance from the Federal Deposit Insurance Corporation, and such a legal discussion should take place. And NFTs terms and conditions must be clearly stated to prevent investors from overlooking that copyright and ownerships are separate rights. Therefore, it is necessary to legally sanction and clarify exchange terms and conditions that do not accurately recognize the scope of digital content use. And lastly, about peace investment. Currently, it is not easy to define whether the various types of peace investments are securities or non-securities. To end confusion over the applications of target regulations, they must be clearly defined and laws such as the Capital Markets Act and the Civil Act must be applied accordingly. So we are done with the digital services, so let me introduce about cryptocurrencies with more details. Cryptocurrencies is the concept that included in the digital services, but I want to explain it about with more details. So there is a mainly 5 debates on the uh, definitions of cryptocurrencies. Is cryptocurrency speculation or investment? Should property rights be recognized for cryptocurrency holders? Or can the stability of cryptocurrency be improved? So, the increase in the value of cryptocurrency is not based on productivity, such as added value creations or technological development, and the prices run unstable. So, it is hard to define it is a speculation or investment. And next, citizens' property rights are considered basic rights but are sometimes limited. So, if the cryptocurrency is the speculation, does the investor have to be protected as well? It is the question. And third, cryptocurrency trading has rapidly expanded, but the price fluctuation is so unexpected. So it is the question that the stability of cryptocurrencies can be secured. And is the relationship between cryptocurrencies and blockchains inseparable? According to the many investors and the professors' opinions, they think it is inseparable. Oh, never left to the opposite side's lots of opinions. It is quite sure that it is inseparable. And what should be the scope of regulation? There is a position that if the instability of cryptocurrency is not controlled in advance, the impact on the economy when the bubble bursts could be enormous, so regulations must be made. And let me introduce about legal issues. Let me introduce about many 3 countries about how they deal with the cryptocurrency issues. First of all, USA and Japan is very leading countries. And Europe is very neutral. European unions represented that it is necessary to adopt a perspective of careful monitoring, focusing on the possibility of innovation rather than concerns about the side effects. However, Russia and China represent very negative positions. In the case of Russia and China, they want to have a strict regulations on it and ban it and don't want the cryptocurrency market to happen. So, legal nature and implications of cryptocurrencies. What is the cryptocurrencies? What's the definitions of that and what is the features of that? Let me explain you about that with my final report. While each country is showing a leading, neutral, or negative stance toward cryptocurrency, the size of the cryptocurrency market is gradually expanding in a situation where social discussions and legal foundations are not sufficiently established. In the case of Korean society, it is the conservative positions that seeks to incorporate cryptocurrency into the institutional system, and to this end, there is the questions of what it is appropriate to classify cryptocurrency is. So, first of all, let me start with the money and asset characteristic of cryptocurrency. Cryptocurrency has monetary characteristic in that it allows storage and exchange of values. However, it has its own unique characteristic in that there is no specific issuing entity. And those are securities and goods characteristic of cryptocurrency. Since most people who currently purchase cryptocurrencies are for the purpose of profiting from the market, it is most appropriate to classify it as a security. In addition, when classified as security, they are subject to transaction tax, making administrative management easier. So let me explain with the legal implication. Currently, social discussions of the definition of cryptocurrency is urgent. This is because a complete ban or these assets could prevent technological innovations and could lead to a situation where it would be classified as a dark market and its impact on the economy could not be soundly controlled. In the case of our society, it can be seen as taking a neutral and conservative stance, but first there is a need to acknowledge the legal status of virtual currency and clarify its definition. To achieve this, social consensus is needed on general debates and legal issues occurring regarding cryptocurrency. The emergence of new markets and technologies must be controlled so that they can function positively at the social level by clearly defining cryptocurrency and establishing transaction reporting obligations and taxation systems for individuals and companies based on this definition. So, in conclusion, it is necessary to establish a legal framework so that newly emerging digital financial services can have a positive impact and protect investors' wealth without causing chaos in society and the economy. Cryptocurrency is expected to gradually expand in scale, causing social controversy due to the simplicity and anonymity of transaction, instability of value, and lack of related legal systems. Even if the country completely bans it, the innovation concept of cryptocurrency will be copied or evolved into new forms and will exert influence on our society. In other words, it is reasonable to believe that once the concept of cryptocurrency has emerged, it will never disappear, and therefore it is more important to establish the direction through discussions at the social level. So, this is the presentations on my final reports about fixed income class. I had research on the digital services, what is the key participants of it, characteristics of it, and what is the blockchain technologies, NFT, CBTC, and what is the problems of that, and how can legal supportings can solve that problem so that it can act as a positively to our societies. And next, I explained with details about cryptocurrencies. Cryptocurrencies is a concept that included to the digital services, but I want to explain it with more detail, so I made separated chapter for it. Cryptocurrencies scales is growing bigger and bigger, and its effects on our society is going enormous. There are mainly three stands about how to deal with that. The countries such as USA and Japan is very leading to the cryptocurrencies, and Europe is very neutral, and China and Russia was very negative about that. It is impossible to get rid of the concept of cryptocurrencies. Therefore, we need to discuss what is the definitions of the cryptocurrencies and how can we regulate it so that it can work good for our society and economy. So I made the studies about the digital financial systems and cryptocurrencies because this is the story about to come soon in our society. So it is very important issues to deal with. Thank you for listening to my presentation.